As you may have seen in the news, Bitcoin is crashing.
This week, the global cryptocurrencies market lost more than half of its value. That's more than $1 trillion, not small.
After reaching its all-time high of almost $63,000 per Bitcoin, it's crashed to below $40,000 in a matter of days. This crash was mainly caused by China banning Bitcoin mining due to a number of reasons, which we'll discuss later in the video.
China is intensifying its crackdown on cryptocurrency. The government ordering the country's biggest banks to, quote, strictly implement rules that restrict them from providing crypto-related services. This as Chinese officials are ordering a shutdown of crypto.
But first, for those who don't know what Bitcoin is, we need to cover a few basics so that everyone's on the same wavelength. What is Bitcoin? Bitcoin is a cryptocurrency that was launched soon after the 2008 global financial crisis. Now, what on earth is a cryptocurrency? Well, quite simply, there are two main types of currencies: fiat currencies and cryptocurrencies. Fiat currencies are issued, controlled, and regulated by the central banks, and these are the mainstream currencies that we use as a medium of exchange in the world today, such as the US dollar and the Great British Pound, etc. So what's a cryptocurrency then? A cryptocurrency can be considered as an alternative to a fiat currency. Its defining characteristics are that they're not issued or controlled by any central bank or monetary authority, and they're issued on a decentralized blockchain platform. A decentralized blockchain means that instead of servers, the data is stored in decentralized nodes, which are virtually unhackable, thus making cryptocurrencies more secure than banks. Transactions in cryptocurrencies are almost instantaneous, which means that you don't have to wait for hours or days for your funds to be transferred, and you can send money anywhere in the world within a matter of seconds. Transactions in cryptocurrencies are also immutable, which means that they cannot be edited, changed, or reversed in any way. Bitcoin was the first cryptocurrency to be launched in the wake of the financial crisis by a character named as Satoshi Nakamoto. Nobody really knows who he is, though there's a conspiracy theory that he may be Elon Musk. Who knows? So there are literally hundreds of cryptocurrencies, but Bitcoin is the most popular one since it was the first to be launched. Bitcoin has therefore become the face of the decentralized finance movement, which is far bigger than just cryptocurrencies alone. What is decentralized finance? The decentralized finance, or DeFi movement, stems from the fintech revolution that too gained traction in the wake of the 2008 financial crisis. DeFi is based on blockchain and similar emerging technologies that are offering to streamline and democratize finance for everyone. DeFi targets the drawbacks and weaknesses of conventional banking and finance, providing solutions that can change the world for the better. Let's look at some examples to understand DeFi better, because this will help us understand why Bitcoins can or can't be the currency of the future. 1. E-wallets, such as Apple Pay, Stripe, and even PayPal, are decentralized finance services that do not rely on banks to carry out financial services. Yes, they are connected to banks at their back end, but at their front end, they allow users to carry out financial transactions at a quicker and cheaper rate than what banks allow. True DeFi apps take the banks out of the equation by removing the need for a financial intermediary altogether. 2. Asset tokenization is another use case of DeFi. Asset tokenization refers to the digitalization of an asset into a security token. The ownership of a building, for instance, can be digitized and turned into a security token. This allows the security tokens to be sold and traded just like shares of a company. Tokenization therefore allows high-value and illiquid assets to be converted into liquid assets. Consider a hotel building. How many people in the world can buy a multi-million-dollar hotel building? Very few, right? Well, if you were to tokenize it, then anyone could buy a small share or token of that hotel building. Tokenization is another step towards democratization of finance. Industry leaders think that it's going to unlock vast amounts of locked finance. The problem with DeFi, however, is that it aims to be an alternative to the conventional banking and finance. Now, this is a major problem because you can't really fight the banking system, as the banks control everything. Resistance from the banking system is the main reason why cryptocurrency and DeFi apps have not been mass adopted. Monetary authorities control the money supply and the interest rates. These are the two main tools through which the pace of economy is controlled. When the pandemic struck, early in 2020 and markets crashed, what did every central bank in the world do? They dropped the interest rates and pumped money into the markets to prevent a catastrophic economic crash. With cryptocurrencies, such as Bitcoin, banks lose the ability to control the supply and interest rate. Bitcoin, as discussed earlier, is based on a decentralized blockchain platform. No person on Earth, not even Satoshi or Elon Musk, who's now the self-proclaimed crypto king, can control the supply of Bitcoins. Why? Because new Bitcoins are only produced when a node completely verifies a block of data and adds it to the public chain of data. In addition to this, the rate at which new Bitcoins are awarded to nodes when they verify data is halved every few years. This means that in the future, the system will stop producing new Bitcoins, which means that Bitcoins will become finite in supply. Now, fiat currencies are typically infinite in supply because the central banks decide how much money to print. Yes, according to economic theories, you cannot print unlimited money, but we've seen in both 2008 and 2020 financial crashes that banks can print unlimited money to stop the system from falling. With Bitcoin, the banks lose this ability to print money whenever they need to because, firstly, they don't control Bitcoin, and secondly, the protocol of Bitcoin makes them limited in supply. This inability to control cryptocurrencies is the biggest hurdle in the way of Bitcoins being used as the medium of exchange. This feature, however, is also one of the strongest points of cryptocurrencies because it takes control away from the banks. Another hurdle is that since cryptocurrencies are based on decentralized blockchain, banks cannot regulate them properly, which allows cryptocurrencies to be used potentially for illegal and illicit activities, such as money laundering and terror financing. Many sites on the dark web deal in cryptocurrencies to mask the identities of those using them. One of the main reasons why China recently banned Bitcoin mining is because of the excessive amounts of money laundering they were seeing. There is, however, a way around this concern. Countries can simply regulate the usage of cryptocurrencies through banks. There are, at present, two ways you can buy cryptocurrency. You can either buy directly through a bank using a bank transfer or bank-issued card, or through a peer-to-peer platform. Most cryptocurrency exchanges allow users to use cards or bank transfers to buy and sell cryptocurrencies such as Bitcoin. This makes it absolutely easy to track the money trail. Crypto exchanges such as Coinbase and Binance collect user data before verifying them. This user data is shared with regulatory authorities to prevent usage in any illicit or illegal activity. P2P exchange, however, can pass under the radar, as most of the P2P transactions are done through cash or through digital wallets. This is an area that governments and regulatory authorities can focus on to create some sort of framework to collect user data. So it turns out that the concerns to regulate illegal and illicit usage of cryptocurrencies aren't really that great. Central banks and government regulatory authorities have an overarching reach, and they can track and trace financial transactions across the whole spectrum. Apart from regulatory issues, there's another major issue that's actively preventing Bitcoin and other cryptocurrencies from becoming the mainstream medium of exchange, and that's the extreme volatile nature of cryptocurrencies. For instance, while the dollar varies by a few cents each day, the price variance for Bitcoin on a daily basis can be thousands of dollars. This volatility allows Bitcoins to be a very good source of speculative profits. Traders can carry out technical analysis to forecast how Bitcoin is going to behave and trade based on their analysis. This allows Bitcoin to function as a store of value, which is one of the functions of a currency. In fact, in the last 10 years, Bitcoin has exhibited that it's a good store of value. It's also gone through at least 2 major crashes, but these crashes can also be seen as phases of price correction after a period of overheated trading. Leading up to 2017, Bitcoin value started rising as more and more miners entered into the market. Mining changed from single computer, home-based mining to a more industrial method of mining farms. Countries like China invested a lot into Bitcoin mining in those days and ended up driving the value of Bitcoin through the roof. Now, whenever the value of any cryptocurrency, stock, or any other tradable commodity goes up, it creates a bandwagon effect, where big and small investors start buying that commodity or currency because they can see that it's going up in value, so it must be profitable. What this type of behavior does is that it overheats the market. So the value continues to rise beyond its fair market value, and then at some point it stops rising and crashes down to its true market value. In 2018, for instance, the price climbed up from just under $1,000 to over $18,000. But then it crashed to almost $7,000 and then went as low as $4,000 before going back up again. This base level of $4,000 can be seen as the fair value, which is higher than the value Bitcoin had before the 2018 rally. Similarly, from $4,000, Bitcoin went up to almost $60,000 in 2020, and then it crashed and stabilized between $35,000 and $40,000. This is why experts call it a correction instead of a crash. So, in spite of functioning as a store of value, Bitcoin is extremely volatile, which is good for making profit if you know how to trade, but bad if you want to use Bitcoin as a currency. To function as a mainstream currency, Bitcoin must follow the following functions: become a store of value, a medium of exchange, and a standard for deferred payments. By all means, it's already functioning as a store of value, so this one's in the bag for Bitcoin. The question is, can Bitcoin be used as a standard of deferred payments and medium of exchange? In order to be used as a standard for deferred payments, Bitcoin needs to be more stable. The current level of volatility is too high for it to be used for deferred payments. As for the medium of exchange, technically, Bitcoin is used as a medium of exchange, as many merchants and businesses around the world accept payments in Bitcoin, but it's not mainstream yet. To be a medium of exchange means that Bitcoin needs to become a mainstream medium of exchange. And this can only happen if central banks and governments declare it explicitly as a medium of exchange. This, as we've already discussed, is a very major problem for central banks and governments because they will not be able to control the supply. Some governments, such as China, are preparing to launch their own digital coin, which is being called the digital yuan. This currency, however, is expected to be controlled by the Central Bank of China, which technically doesn't make it a cryptocurrency, but hey, it's a start. Russia is also preparing to launch digital ruble, as this shows us that central banks and governments have at least seen the potential benefits of DeFi and fintech. They've realized that the banking system needs to adopt these innovative technologies instead of resisting them. But the government still don't seem to be ready to completely embrace Bitcoin. What does this mean for the future of Bitcoin? Bitcoin's here to stay. This much is clear. Will it be used as currency in the future? It may be too easy to say because the decision to declare Bitcoin as a valid legal tender rests with the central banks. Till then, Bitcoin will remain the face of decentralized finance. And that's it for today's video. What do you think of Bitcoin as a currency? Do you currently use Bitcoin to pay for goods and services? Let us know what you think by leaving a comment down below. If you enjoyed today's video and you want to see more, make sure you subscribe to our channel and turn on the bell icon to stay updated whenever we release a new video. Other than that, thanks for watching and I'll see you in the next one.